bias and how to go about building their bias and a whole lot of stuff you get. So in today's session, we'll be trashing out everything and we'll guide you on how to go about this to avoid losses in the markets and how you can as well build a valid system for yourself. You get. So there are a whole lot of stuff we'll be sharing with you guys today on this session. So if you don't want to miss out, make sure you stay tuned to the very end. So I will give room for Fazi now to take on with the session.
So everyone, thanks Desmond for this opportunity. So have a good day. So have a nice day. So good morning everyone, wherever you have. Good night and good evening. So let's discuss about the topic. You can hear me all right? So Desmond, you can hear me?
Yeah,
Can you
yeah.
confirm
I
that?
can hear you. Can hear you clearly.
Yeah. Okay. So and confirm that you have seen my screen now. So is
Yeah,
it
I can see
visible?
you.
Okay. Okay. All done. Okay, so let's get into the topic. Okay, so before we are discussing about the CRT and the building bias, so you need to know some basic stuff. So whenever we have starting our session, we always touch with some basic stuffs to understand that, because before knowing that basic things, you cannot understand the pro levels. Okay, so whenever came into the CRT and MSNR and the strategy with SLK, so this is what we are trading in this trading room. Hope you all know that you are in our community. You can see our results, how it is performing by these strategies. So please understand the topics. Whatever you are using the strategies, use it fully. Master in one that what you are following that. If you are following MSNR, fully focus on that. You are following the CRT, fully focus on that. If you are following the SLK concept, then fully focus on that. So choose one and master one. That's the important thing before into the trading. Okay. So let's get into the topic and let's see. So Desmond, can you mute yourself, please? So let's get into that. Okay, all right. So before knowing that, you know that anatomy of the candle, every candle has high, close, and open, low, like that. So you must know that every candle has a own liquidity. So before starting the liquidity, this is the candle. That candle, every candle has own liquidity. The candle high also the liquidity, the candle low also liquidity. So this is the basic stuff. You need to understand that when it is the bullish environment, understand, when it is a bullish environment, the candle high we will call as the external range liquidity. So the candle high we called as the external range liquidity, the candle low we called as the internal range liquidity. So when it is come to the bearish environment, so when it is came to the bearish environment, we have the candle highs and lows like this. So there candle low we called as external range liquidity, and the candle high we called as internal range liquidity. So this is the basic thing you need to understand, that when it is came to environment. So before building your bias or building your trading setups, you need to understand your two things. What are the two things you need to understand? What environment you are. So what environment you are. We have a two types of environment, which is we called as a bullish environment, and we have bearish environment. Understand? We have a two types of environment, which we called as we have a two types of trend, right? We have a bullish trend and we have a bearish trend. So these two trends each have two types of moves, each have two types of phase, which we called as the first phase we called as expansion phase, and we called as second one we called as retracement phase. So whatever you are in, I can, you all see that screen, right? And you can see my text too. So here you are in a bullish environment or bearish environment. First choose that what trend you are. After choosing the trend, you need to know what phases you are. This we call as a two types of phases, which is the expansion phase and the retracement phase. So what is expansion phase and what is a retracement phase? So if you are in a bullish environment, you can see if you are in a bullish environment, I told that the candle high, which is the CRT candle high, right? When the candle range high, we call as external range liquidity. So that candle range high makes new higher high, right? So these highs are a new higher highs. So whenever the price making a new higher highs, the price always comes some retracement. After the retracement, it start to make a new higher highs. You are clear about it? When making a new higher highs, it gives some retracement, right? So here we have two types of moves, which is the expansion move and the retracement move. So what is expansion move? When the price making a new higher highs, which we called expansion move. After making a new higher highs, when the price retrace here, then we call that as retracement move. Understand? So understand the phases, what phases we are. We are in expansion phase and retracement phase. What is expansion phase? The expansion phase is making a new higher highs. What is retracement phase? After making that expansion move, price will retrace. Price will pull back. So that move we called as a retracement move. So we have a two types of phases on both bullish trend on bearish trend. So this is on bullish trend. When it comes to the bearish trend, so there you can see the price always create new lower low like this, right? So when it creating a new lower low like that, so that move we called as expansion move, and when the price retracement, that we called as a retracement phase. So here we have two types of phases. What phases? This phase we called as expansion phase. When the price retracement, that we called as retracement phase. So you can understand that what phases you want. So this is the basic two things. Before choosing your trades, you need to understand what type of move this is, that what type of environment and what types of phases. So if it is expansion move, so if it is expansion move, so here what happened, the price will move IRL to internal range liquidity to external range liquidity. If it is a retracement phase, the price move external range liquidity to internal range liquidity. Understand, guys? So expansion move, the price move from internal range liquidity to external range liquidity. In retracement move, the external range liquidity to internal range liquidity. So here many people know that, many people can see that how they are trading, but they can't utilize how to use it. They don't know how to utilize it. They don't know what is the procedure to use it. Okay, so I told you that whenever you see that the internal range liquidity has been taken out, the price move to external range liquidity. So here when we have a sweep and we have the breakout structure, so here you can see what we called as a sweep. So this we called as a sweep. Then we have a breakout structure to the here. Okay, after breakout structure, the price retrace here and it will give you a breakout. So whenever you can see the breakout structure and the breakout. So what is breakout structure? So this one is breakout structure, this one is sweep. What is breakout? After breakout structure, this one is breakout. Understand, guys, what I mean? So this is B sweep, this is breakout structure, this is breakout. Understand? So whenever you have a breakout structure and the breakout here, the price will retrace the reason for breakout, then it will make new higher highs. What I told you, after creating the breakout to the upside, the price will take out the low, which is reason for the breakout. So you understand that this is the reason for this move. This is the sponsor candle for this making a new higher highs. So what the price do? The price will create that as internal range liquidity. It came to take that and it will make new higher highs. So this type of move we called expansion move. Understand what is expansion move? So the expansion move is called internal range liquidity to external range liquidity. So what is retracement move? So after taking a new higher highs, after taking this new higher highs, what the price do? The price always came to retracement. After retracement, it will create some liquidity. It will create some liquidity. So that liquidity has been need to taken out. So that type of move, which is after taking external range liquidity to the price move to take this internal range liquidity. After taking that, it will move to another external range liquidity. So this retracement move we called as the retracement phase. So we know that the overall trend is bullish, but in this bullish trend, we have two types of phases. We have two types of opportunities, which is buying opportunity, which is a selling opportunity. So in bullish environment, when we are looking for buys, that type of move we called as expansion move after taking the internal range liquidity. In bullish environment, when we looking for a sells, that type of move we called as a retracement move. So that retracement move target to take this internal range liquidity, then it make new higher highs. So understand what types of phases we have. We have two types of phases: retracement phases and expansion phases. Understand this. Then now let me consider about how to build bias. So whenever you are going to build your bias, you always go with higher time frame. Don't go with a lower time frame. Whatever trader you are a scalper, you are a intraday trader, or you are a swinger, you always need to build your bias with higher time frame. So what we call as higher time frame, a monthly time frame and the weekly time frame, a daily time frame. These three are the higher time frame. These three are the most valid thing for building your bias. So without building this time frame, without considering this thing, if you consider as a 4-hour issue for your building bias, that is not give you more confidence than this. So always, the daily is better than H4, and weekly is better than daily, and monthly is better than weekly. So always start with a higher time frame. If monthly didn't show you anything clearly, then go for weekly. But you always need to choose at least 3 time frames. If you are starting with monthly, end with daily. If you are starting with weekly, then weekly, daily, and H4. So consider these two things only for building your bias. So how we build our bias in our MSNR strategy or SLK strategy, how we build our bias. So what we do is, we always, before building bias, I always posted a video about that, expectation and execution. We have two types of things here: expectation and execution. So you need to consider two things from the market. So when you see that, then only you need to choose your trades. So what is expectation and what is execution? So the expectation is the thing, when we have a weekly or daily or monthly key level like this, when you have a weekly, monthly, daily key level like this, so the first thing what you need to do, you need to wait for the candle to reach that key level. Understand? You need to wait for the candle to reach that key level. So when the candle reach that key level, so the first thing, they will wait for the price to trigger. So here the candle trigger from this key level, right? So if this is the weekly key level, this is the weekly candle, you need to wait for the weekly candle to close. So you need to wait for the weekly candle to reject from it and close below from that key level. So that is the first thing, the price showing the interest for our key level. If it is not close below, if it is close above this key level, then that we can confirm the candle doesn't have any interest for this key level. So you cannot build a storyline from this. So the first thing you need to wait for the candle to close below from the key level. So that is the first thing on expectation. Understand? So this is the first thing on expectation. What is the second thing? You need to go for one time frame lower, which is a daily. That daily need to give you a sweep and breakout structure. What is a sweep and breakout structure? Here we have the weekly key level. So that weekly key level need to sweep like this by a daily candle, and it need to broke the structure like this. So when you see that 80% of storyline work will be finished, understand? So you going to see the weekly candle to close below from the key level, and the daily need to give you a breakout structure, sweep and breakout structure. After seeing that, you can confirm the expectation has been filled. So what is expectation? I told you what is expectation. So when you get into the expectation, the first thing which is you need to wait for candle to reach the key level. So that is the first thing. What is second thing? So the second thing is the candle need to close below from the key level. Understand? So this is the second thing. What is the third thing? One time frame lower. You need to see sweep and breakout structure. So understand the 3-step on expectation. So you cannot take the trade until the candle completes this thing. So when this thing all happened, right? Expectation has been filled. The market has been filled your expectation, right? So after expectation, you need to go for execution, right? So in execution is the area where we are choosing for our entries. So after going to the execution, what we need to wait for? We know that the price can give sweep and breakout structure on daily. So after sweep and breakout structure on daily, we need to go for find the entries. So where we need to find the entries? Before finding entries, we will wait for the liquidity has been to created. So if the liquidity has been created by a 3 ways, maybe it below than the breakout structure, or above than the breakout structure, or nearby to the apex level. So how the liquidity has been created? Maybe below than the breakout structure. We know that this is breakout structure, right? This is breakout structure. This is sweep. So the liquidity has been created below than breakout structure, or we have the liquidity has been created above than the breakout structure. So where the liquidity has been created here, it is above than the breakout structure. What is breakout structure? We have a sweep. We have a sweep here. We have breakout structure here. Understand? So the another thing, the price can create liquidity nearby the extreme level. So this is how the liquidity has been created by 3 ways. The first way below than breakout structure, the second way above than breakout structure, the third way nearby the extreme level. So after seeing that, we can find our entries by this liquidity. If the liquidity was created below than breakout structure, you can choose your entry on this breaker level. Understand? What we call as a breaker, this we call as a breaker. So that breaker level, we can choose our entries. If that is above than this breakout structure, where we can choose our entries on the QM level, this QM level. So if it is nearby the extreme level, we can choose our entries on apex level. So you can understand that how to choose entries by this liquidity. There is three types of area where the liquidity has been formed: below than breakout structure, or above than breakout structure, or nearby the extreme level. So if it is was a below than level, so here let me give you a table. So if it is a below than breakout structure, we will going to look for entries on a breaker. So above than breakout structure, we will look for our entries on QM. It is nearby the extreme level, we will choose our entries on apex level. So this is the area where we need to choose our entries by this liquidity formation. Understand how to build your bias and how to choose your entries. So this is the first step we need to look for on execution, where the liquidity has been formed, right? So after the liquidity has been formed, we know that we have a three types of level, which is, we know that we have a three types of level, which is the apex level, which is the extreme level. We have a QM level, which is this level. We have a breaker level, which is this level. So we going to choose our entries by these three key level, not any more key level, not inside here FEG or open close, nothing. We are choosing the entries only by the apex level, the QM level, or the breaker level. Understand? So you are choosing, that now the price came to, now for example, the price came to the price form liquidity above than the breakout structure, and it give you a breakout. So what you do that when the liquidity has been formed above than the breakout structure, what I told you, we need to look for our entries on the QM level. Understand? So you need to wait for the price to came to this QM level. Understand? Came to this QM level. So when the price came to this level, how to take entries? Whenever the price came to our key levels, how to take entries? So the many people always struggle in here, the entries. They all find, everyone can find the key levels. There is no biggest problem or the biggest struggle in finding the key levels. Everyone can find A shape or V shape key level or open close key level easily. But the main thing, the main point, which is the entries. So how to choose your entries when the price came to this key level? If the price came to your key level, which is on the QM level, so what you need to look for it, I always tell you that the price can move only for two things. What are the two things? The one thing is the price came to attack the liquidity, and the price came to fill the imbalance, which is rebalance the imbalance. The price always came to the two things: attack the liquidity and the fill the imbalance, which we call the FEG, fair value gap. Understand? So this is the two things you need to wait for. So here, what the price came to do? The price came to do attack the liquidity, right? So the price came to attack the liquidity. We have a nearby key level, which is the QM level. So when the price reach, what you need to do? How to choose your entries? Choose any entry model which is comfortable for you. How I choose entries, how I look for my entries. I will look for engulfing entries, which is work very well on this type of key level. So when you have a key level like this, I will choose the candle to reject from this, key level. Understand? So when you have a QM level, I will wait for the candle to reject from the key level. Then I will wait for if any other candle sweep that wick. Understand what I say that? if the candle reject from the key level, or and the next candle need to sweep from it. Otherwise, otherwise, what the candle can do, the nearby candle like this, the next candle sweep that previous wick like this. So if we have this candle wick like here, the next candle sweep that wick, and the wick need to came from the QM level. Understand what I'm saying? We need to look for the candle formation by this. The first candle can trigger that QM level, and the second candle can create a sweep, or the first candle creates some liquidity nearby that QM level, the second candle need to sweep that and close below it, and it need to form a key level which is a V-shaped key level, which is A-shaped key level, which is we look for cells. Understand what I'm saying? So this is the candle formation. You need to wait for it. So when you have this candle formation, you can enter on that key level with confidently. You don't want to enter this QM level directly, because we don't have any confirmation. Maybe that QM level can trigger, or that QM level can disrespect here, then the apex level can be react from here. We don't know that, right? So trading is only a possibilities and the probabilities. So here you need to wait for the candle to reject like this, and the candle to create a sweep. After creating a sweep, when you have seen this A-shaped key level like this, you can look for entries. And you have some rules. The people who doesn't understand the concept fully, whenever seeing this type of A-shaped key level or V-shaped key level, they will look for entries. But here we have a simple, tiny rules. If you not follow that rules, it may be hit your stop losses. So what is the rules? When the candle making this A-shaped key level like this, understand, this candle low not to be taken. This candle low not to be taken by the second candle. Understand what I'm saying? This candle, first candle low which is forming the A-shaped key level, that low not to be taken by the second candle. It means the wick can be taken. There is no problem in the wick, but the body not need to be taken. Understand? The body not to be taken by the first candle low. So what I told is the candle body need to close above than wick. So if it is happen here, you can look for a third candle which can be triggered on your V-shaped key level. Understand? So this is the tiny rules. You need to follow that. Whenever you are seeing the candle formation like that, you need to confirm that the candle low not to be taken by the second candle like this. Understand? The second candle like this. If the candle will be closed below than this key level, then I won't look for this type of entries, which is engulfing entries. Then what I do, if it is not close above this, then what we will do, we will look for any other breakout structure, wait for a breakout structure, then we will enter in any fair value gap like that entries. But in engulfing entries, this is the rule, you need to follow it. Understand? So the first candle low not to be taken by the second candle body, not to close below from this. It need to always close above from this. The wick has been taken. If the wick was closed below it, no problem, no issues in that. The body, the candle body, not to close below from the level. Understand the thing? This is the type of engulfing entries. You need to wait that. So like this level. So here you can enter from that. You can put your stop losses on this, the wick, where you have a sweep level, right? So here you have a sweep level. You can put your stop losses on this sweep level, this sweep high, right? So here you can put your stop losses on this. So here you have another confirmation. Whenever we have like this formation, so whenever you have this type of entry candle formation, which is I told you the engulfing entries. So here, what I told you, the first candle will be like this. The second candle wick need to be taken the first candle, and it need to came from the higher time frame key level, which is maybe the apex level or QM level, whatever the level, that key level, the second candle need to came from that key level, and it need to be sweep the previous candle. Understand what I'm saying? If it is create like this, if it is the A-shaped key level, then we can look for entries. So what is the rule? That first candle wick, the wick low, the low of the candle, not to be taken by the second candle, which is from the A-shaped key level. So if you are seeing like this, you can look for your entries. If you are seeing this on H4 level, then go to the H2 level. So in H2 level, how the level look like. This A-shaped K level, how look like on the H2 level. So when you get into the H2 level, in H2, what the price do? The price creates some bullish candle like this. Some bullish candle like this. Okay. Then after that, it will create like this. Understand what I'm saying? It create the bearish candle. So that A-shaped key level and this open close key level, how the open close will be two conservative buy candles and then the sell candle. So this buy candle, it will trigger in this on key level, and this sell candle, it will break this candle low. So two conservative buy candle and the sell candle. So when you are seeing like this formation on H2, so when you are seeing this on H4, this on H2, on the same level, not different level, this H4 entries look like H2 entry like this. So when you are seeing this H4 aligned with H2, that type of entry is very powerful entry. That need to be valid. You can confirm. You can confirm your trades. This must to be valid. This must you hit your take profit like this. Understand? So when you seeing this H4 A types of engulfing entries, go for H2. So when you are seeing this on H2, when you are seeing this on H2, then go for H1. So see that levels, mark this A-shaped key level, go for H1, see that H1 look like this. If H1 look like this, then you can confirm that these two time frame was aligned with each other, which are H2 time frame and the H1 time frame. If you are seeing it on H4 A-shaped key level entries, then go for H2 time frame to find these two conservative buy candles and the sell candles for your entries. So when it is aligned with each other, you can take these entries without any fear. You can put your stop losses on this, this level, which we called as the sweep level. We have a sweep here, right? So you can put your stop loss on above than the sweep, maybe a 2 pip, a 3 pip above than the sweep. Understand how to enter when the price came to react from the key level. So whenever you are entering the direct entry from that key level, it may be fail. But when you are looking for this type of confirmation, you can filter your trades. You can avoid unwanted losses. Understand? You can build your higher time frame direction very well. You can mark your higher time frame key level very well. But if you are not confirmation with your entries, it hit your stop losses, then it all waste, right? Without the profit, the plan was waste. So look for the confirmation entries like this on H4 or H2. If you are looking for a H2, then go for a H1. If looking for a H1, then go for a M30. I always tell you that the bias, you when you are building your bias, you need to go for a monthly, weekly, daily time frames. When you go for entries, you can choose H4 level, H2 level, H1 level, or M30 level. Don't go below than M30. So I see that in my experience, I sense that the below than M30 level is more nice. So the M30 level is the lowest level when you look for a entries. Don't go below than that. Understand? So M30 level or H1 level or H2 level. So you may understand that how you need to look for your entries. So this is the thing I need to share here. Then after that, now let's get into the you have any doubts here? So if you have any doubts, let me know going for another topic. So if you have any doubt, you can ask me. Yes. Yes, big channel.
Good evening.
You can ask me.
Good evening. Because
Yeah.
I hear him. Hello? I hear him, sir.
Sorry, I can't hear you. Yeah.
Hello. All right, please, if you are going to ask a question, please make sure you are fast and we don't have much time so that we can proceed. So please ask your question very fast.
Okay, sir. The way Mr. Fazi is explaining, like I'm getting it, but the issue or the where I have doubt is just that, like you mark that when we have liquidity above either the break of structure or like liquidity below the break of structure, like I want to know like exact time frame, like to even look for that setup, like to actually mark the liquidity and break of structure. So that's just my concern. That's just my doubt.
Okay, then. Okay, let me explain you. So let me mute here. Okay, so what he is asking that, when you are choosing for that liquidity, when you are building your bias, when you go for entries, you will know that you have like this formation, a sweep and breakout structure like this. So we need to look for a liquidity, right? So the time frame, what we need to look for this liquidity, a H4 time frame or a daily time frame. Look for a H4 time frame. Don't go below that. So the H4 time frame, the high was, you need to wait for after the sweep and breakout structure, the H4 candle highs close above than this breakout structure level or close below than this level. So when you choose that level, you can start to look for your entries by this QM level or apex level or this breaker level. So all you need to do is this, after the breakout structure, this liquidity formation, when you confirm this liquidity formation by this breakout, understand? If there is no breakout, there is no liquidity. Understand that. Always look for this type of entries. Don't always stress yourself. Look this type of entries that will give you more potential move. Understand? So when you have like this breakout level, then you can confirm that high was liquidity. So what we need to look for, that high need to be taken and it need to be level or apex level, and it will start to move to the external range liquidity, which is that low. So what type of move this is? This type of move we called as internal range liquidity to external range liquidity. That type of move we called as expansion move. Understand? So the next Mayor and Credible.
Okay, now Mayor, please, I'll give you mic to ask your question. But before doing that, Big Gentle, I want to be very sure that you understood everything he said so far concerning your question. Gentle, please, I want to be sure that you understood everything he said. Okay, I think he's not active right now, or maybe he's having a network issue. So I'll be giving you mic.
I understand now. Thank you, sir. I understand now.
All right.
Okay, done.
You're welcome. Okay. I'll be giving another person mic to speak. Please. I'll be giving another person mic to speak. Please. If you are giving mic to speak, please ask your question very, very fast. So, Henry, I'll be giving you mic right now to speak. Please ask your question. Those who are raising up hand. Jonathan, please, if you are available right now, you can ask your question. Okay, Fazi, I think okay, I'm seeing another person raising up his hand. Please,
Okay, once we're done, we can keep the question and answer at the end, no problem. So we can keep that on the end. So we can carry on.
Yeah, good evening.
Okay.
Yeah,
someone
is
already asked.
Yeah, this is Jonathan. This is Jonathan.
All right.
Yeah, speak.
Okay. What I want to confirm is, like, if I want to go trade like intraday, like time frame to actually start my storyline, and then where to look for my liquidity and then entry, then that's just what I like. Time frame alignment.
Yeah, done. I will inform that.
Intraday for intraday.
I will inform and coming. Yeah. Okay, done. I understand. Then anyone?
Yeah, my question is, hello, good evening.
Yeah, good evening, Mayor.
Yeah, thank you. Well, most of the explanation, at least try and show us some of this in the real charts. So
yeah, I will show that.
Yes, just show us.
Yeah, once we will get into the outlook on the session end, that I will show the chart how I am marking these levels. Okay.
Yeah.
So we will see on outlook before in this session. No problem at all.
Okay.
I will show the examples.
Yeah, joining of this, sometimes some of us might not really understand, but when we are explaining with the real chart, we will see exactly how it's happening, and maybe that will help.
Yeah, I will show that. No problem at all. Thank you. Then anyone? Then we have hallmark columns.
Fazi, I think you should just proceed. Anyone with any question or ask at the end of the session.
We will keep on the. Okay, done. So let's get into the next topic. So after that, so when you get into this type of move, which we call the expansion move. So now the people need to understand how we need to take the retracement move. When we know that we are in the bullish trend, we know that if the internal range liquidity has been taken out, we are going to target the external range liquidity. So this is the expansion move. Okay, I will tell you the expectation and execution for the expansion move. But when you came to the retracement move, so what we need to do that, we know that we are in bullish environment like this. So here, if you are seeing for the retracement move, so what is the retracement move? The retracement move which is happened from the external range liquidity to internal range liquidity. So that is the move which is a short-term move compared to the expansion type of move. So how to take entries on the retracement move? This is the topic what we need to look for here. So what we need to look for here, how to take entries on a retracement move. Understand? So here, so what is a retracement move? I told you that type of move will be external range liquidity to internal range liquidity. So ERL to IRL. So here you need to understand that how to choose the entries here. So we know that when the price taken the new higher highs like this, right? The price can take new higher high like this. We can look for some short move, some sells to take the internal range liquidity. So how to choose our trades? So here we need to look for a sweep. Understand? So here we have the only one confirmation, or we have a expectation and execution, right? So what we need to expect here in the market? So here we have two types on there. We have expectation and execution. Always in every trace, you need to put your plan into this. Okay, expectation and execution. So what you need to expect from here when you are seeing a sweep, that is the expectation. Understand? So the first thing which is you need to see a sweep. So here we have taken a new higher highs, then the price need to give you a sweep like this. So that is the first thing. The price showing the interest, you don't want to go above, right? you'd want to give some cells. So this is the first thing. So when you are seeing this on higher time frames, I always tell you that you are building bias on always on higher time frames. So what is the building bias on retracement move, which is the sweep? So the sweep must be happen on daily or weekly or monthly, whatever, which is higher time frames, right? So whenever you are seeing a sweep, we know that we are going to sells. So the expectation will be done here. Now we need to go for a lower time frames for our entries, which we called execution, right? Which we call execution. In execution, when you have this daily sweep, in execution, there you need to see the another sweep. So here that sweep need to be the same thing what I tell you on that confirmation entries. That sweep need to be take the previous candle highs like that. This high need to came from this sweep. Understand? When you are seeing this on daily, you need to go H4 here. In H4 time frame, if the price gives like this formation, you can choose your entries on like these levels. Like these levels. You don't need to wait for the daily candle to close or nothing. Don't want to go for daily candle to close. When the price started to give you a sweep, go for lower time frame, which is a H4 time frame. That H4 time frame need to be formed like this. If the H4 time frame, we have a two candles H4 time frame, which is this is 4 hours, this is 4 hours. So in 8 hours on this 24 hours candle, if it is created like this and the candle low not to be taken by the second candle, you can take entries by like this. Understand? So this is the how we need to entries on retracement. So the entries on retracement, we have two types, which we need to look for two things, which is expectation and execution. So what is expectation? Expectation on sweep is sweep on higher time frame here. That is expectation. What is execution? In execution, H4 time frame or H3 or H2, it need to create this A-shaped key level. If it is create like this by a sweep, then we can look for entries. So this is the one entry model. I don't tell this is the one and only entry model you need to look for it. This is a one type of entry model which always follow one or two types of entry model. If your condition are met, then go for entries. Don't chase prices, don't chase entries. Okay, when all criteria has been met, if it is gives you an entry, then look for a trades. So like this type of trades will always give you the good potential profit from that. Don't go for whenever the price trigger that, you will look for entries. Whenever the candle is rejecting from that, you will look for entries. Don't go for that. Always set a plan before the trade. Always set a plan. If the plan criteria has been met, then go for entries. Understand? So always stick with one entries, master with it. You can see in my channel, I have taken this type of trade in last week. I have achieved almost a 45 RR. If you want to check with that, go with that. I always share my plan before that. So there you can see I achieved almost a 45 RR in a week. I don't go for a fancy RR. I stick with a 5 RR, 10 RR, what the market gives. Understand? With only this type of entries. So know that the market giving you opportunity, but you are not willing to take it. So always stick with your plan, go with your plan. If all criteria has been met, then go for your entries. So this is the thing what you need to look for. So now let me get into some market outlooks. There I have tell you that how to choose, how I am marking the, how I building the bias, how I am choosing the entries. So let me get into that session now. Okay. So here I have choose a minimal of pairs, like Euro CAD, Euro NST, and gold and Euro AD. So I choose this for my affordability things. I am good with these things, so I am choosing I'm showing what I am looking for next week here. So if you have any pairs, you can ask me in our chat group, or can mention that we will share in our chat group. Okay. So let's get into the euro cat. So what I told you, we will need to always came from the higher time frame direction. So let's get into the monthly time frame. So what the monthly gives? Nothing. The monthly will, here we can see the previous candle high was taken here. So what it means, the external range liquidity has been taken, right? So still the monthly candle will close on 5 day on 2 hours. So the candle will be there. So this is our monthly. So the monthly, we know that we are in bullish environment, and we are in what phases? We have two types of phase and we have two types of environment. So here we know that we are in bullish environment, we are in retracement phase. So the first mark that we are in bullish environment and we are in retracement phase. So in retracement phase, what is the type of move? The type of move which is external range liquidity to internal range liquidity. So in retracement phase, we can look for a sells, not look for a buys. So we will look for some sells here. Once if the liquidity, internal range liquidity has been taken out, then look for buys to target new highs, right? So let's get into the weekly time frame. So what the weekly gives you? So you can see here the weekly gives you a sweep here. Understand? The weekly give you a sweep here. Then the weekly give you a what type of key level this. So we have a A-shaped key level like this. So here let me mark that we have a weekly A-shaped key level like this. Okay. Then we have a weekly sweep here. So here this is a weekly sweep. Let me mark as WS, and this is a weekly A-shaped key level. So what is my first target? The weekly candle low, which is the candle range low, right? So this is my first target. If I take sells, which is the previous weekly low, understand? So this is my first target, and these two. So these are my targets. So let's get into the daily. So how to choose entries here? So here, after that, what I mark weekly A-shape level, what I mark the weekly A-shape level look like daily, which is the another key level, which is we have a V-shaped key level. You know that we all know that the V-shaped key level has been broken impulsively here. So it is look like it is the failed key level. You all know that. So now mark this as liquidity. So this is my liquidity. So here what I am looking for my sells on this weekly A-shaped key level. I am going to target at least this low or this low here. Understand? So here where I put my stop losses to here. So for perfect entries, let's get into the lower time frame, which is on H4. So H4, what H4 tells you that? So here H4, you can see that we can see a sweep. We can see that the H4 mark, H4 created A-shaped key level. So when I'm choosing my trades, the stop losses nearby that level, that will be fine for me. Understand? Because that H4 level has been already reacted. So I will choose my entries on daily. I will put my stop losses on H4 sweep. So this is where I'm looking for on Euro CAD, taking the sells from here and look for target to this level. So here the people can ask that we have a daily sweep on this level, right? So this is our daily sweep. We know that the daily created a V-shaped key level, so the buys is still continuing. Understand? If you are taking the buys from here, see my on channel, I have taken this buys. If you see my channel post, that I have taken this type of buys and I will target to the level, weekly A-shape level. So still my buys are running here. So we will look for a Monday. If you are looking for a sells, you can wait for this area to continue here like this. Understand? So this is the thing where we are looking for on daily on EuroCAD. So here, so let's get into the another pair, Euro NST. So on Euro NST, when you get into the monthly time frame, so on monthly time frame, what will see the monthly sweep, right? So we are in a monthly sweep. So what we know that the external range liquidity has been taken out. So we are in bullish environment. We are in retracement phase, right? Now get into the weekly time frame. So what weekly gives you, so the weekly gives you weekly. We don't have any sweep on here. When you see here, weekly have a sweep on this area, okay, and we don't have any sweep on weekly here. Let's get into the daily. So what you seeing on daily, you can see you have a daily sweep here. We have a daily A-shaped key level here. So what the price came here, you can see what the price came here. Let me delete it all. So here the price came to fill the imbalance, right? You can see the price came to fill the imbalance. So I always tell you the price came for their two things: fill the imbalance and attack the liquidity. So in this imbalance, in this higher time frame imbalance, if the price gives you a sweep, consider that sweep. Understand? Here you can see we have a daily sweep here. So where the sweep was happened, the sweep was happened on daily imbalance. So the price came to fill the imbalance. After fill the imbalance, the price started to give you a sweep. So here I can confirm that the internal range liquidity has been taken out. I can target my price, my long into this level or this extreme level like this. Okay. So here what I mean is I'm going to look for a buys because of this daily sweep which is happened on this imbalance, right? So whenever you have a doubt, note it down. After finishing this session, we will give you the chance to ask your questions. So here you can see we have a daily sweep which is on the daily imbalance, right? So I am going to look for a buys. So the buys can happen on this daily V-shaped key level. So this is the type of entries I'm looking for. Now get into the H4 time frame. So what the H4 time frame gives you, here you can see the H4 time frame give you a sweep like that. That level came from a daily sweep. You can understand the week. So we have a H4 sweep here. That sweep low is came from that weekly sweep, the daily sweep. Understand? So now you can look for entries. So how you need to look for entries? If that V-shaped key level has been formed, then you can look for entries. Now you can see that what we choose on daily level and H4 level aligned with each other. Now get into the daily. What you are seeing daily that is the V-shaped key level, and H4 that is the V-shaped key level, and we have a sweep. So here what we are looking for some entries on this level like this. We can put our stop loss on this sweep. We can put your target on the first liquidity here, and then we can target into the new highs here. Understand how to look for entries? So there is the second thing what I am looking for in next week, which is on this weekly key level. Understand? So here the people can ask that here we have a sweep. Then we are looking for a sells, right? Why we are looking for buys? The main concept was after taking external range liquidity to take internal range liquidity. So when you are seeing this sweep on this imbalance, this 3G, you can consider that internal range liquidity has been taken out by this sweep. Understand? So after taking that internal range liquidity, the sell criteria has been met. why the sell was happened? The sell was happened to take the internal range liquidity. Once the internal range liquidity, it is target to the external range liquidity. So this is the price cycle. Price always move to take internal range liquidity to external range liquidity, external range liquidity to internal range liquidity. So this is the always the market cycle you need to look for. Understand? So that sweep, that sell sweep was finished that when you are seeing a sweep on buys on the imbalance, right? So here we have a sweep. It is finished that we can it give you a V-shaped key level. Look for entries on Euro NST. So this is what I'm looking for, Euro NST. Now get into the gold. So what we are looking in gold. So gold, let's get into the weekly time frame. So here, what happened on weekly? So what happened on weekly? The weekly gives you a sweep. All right. So what it means, the price on bullish environment, and we are in retracement phases. So in retracement phases, where the price move to external range liquidity to internal range liquidity. Understand? So now let's get into the daily. So here, if you take your cells, so here where you can take your cells on daily, you can see the price taken the daily sweep to, and the daily created a shape key level. So the price doesn't give any entries to here. Now here you can see that what I told you, the price always came for two things, to attack the liquidity and balance. So here you can see that the imbalance has been filled here. So when the imbalance has been filled here, there we have a sweep. So we can consider that this sweep tells that the internal range liquidity has been taken out. So once the internal range liquidity has been taken out, we can look for the external range liquidity. Understand? The external range liquidity. So here you can see that the internal range liquidity has been taken out, and we can go for a lower time frame like H4. So what H4 gives after taking that internal range liquidity? So here H4 also give you a sweep. You can see H4 also give you a sweep, and you can see that it created a V-shaped key level, right? So what we can look for on Monday, we can choose some entries on this V-shaped key level, and we can put our stop losses on this below than the sweep, and we can target into the external range liquidity to the above. But for safer side, we can target to here. Why I am telling this? Because I always tells you that the price always came to two things, which is attack the liquidity and fill the imbalance. So here that you have a daily FEG here. Okay, you have a daily FEG here. When you are taken that buys, if the candle comes, the candle comes to that FEG. So here, if you are seeing any sweep on that, in daily time frame, if you are seeing any sweep on this imbalance, you need to know that the candle doesn't have interest to go above that. So the next liquidity has been taken out. So what it do? After taking that external range liquidity by a sweep, it will target to this internal range liquidity, and we have another key level here. The price may be came to this level, and it will target to here. So what you need to look for, it means after taking internal range liquidity like this, you cannot straightly target into this level. Understand? You cannot straightly target into this level, or you can set your take profit. You don't go for a forget thing like this. Okay, so you need to monitor when the price came to fill this imbalance like this. So you need to see here, if you have any sweep on inside this level. If you have any sweep, then the price came to this level. If the sweep, you don't have any sweep, then the price target to this level. Understand? So this is what we are looking for on gold. we are looking for H4 buys. Okay, so here we are looking for a buys from the H4 level, and we will target to the daily imbalance level. Understand what I'm telling? So this is the thing what we are looking for on gold on this H4. Okay, so this is the thing. Let's get into the another pair, which is euro ad. So here let's get into the higher time frame, which is a monthly time frame. So here what happened on monthly? So here you can see the monthly give you a sweep like this, and the monthly give you a sweep like this. So what do you do on this situation? Because the candle taken the low and the candle taken the high. Now you need to go for lower time frame to find the direction. So on weekly, what happened first? So on weekly, this happened first, this happened next. Understand? So what is the recent level? So the recent level, which is the price sweep from this level. So what we are looking for, the price taken external range liquidity, we are looking for the internal range liquidity has been taken out. Maybe this week can be internal range liquidity, or this week can be internal range liquidity, but we are looking for sells from here, not a buys. So let's get into the daily time frame. What dailies gives you? On daily gives you a sweep, and daily gives you a A-shaped key level. So if you are looking for a sells, you can look for like this. So in euro ad, you can look for a sells from like this to target these levels. Understand? So this is on euro ad, how you need to look for it. So this is the thing. This is the expectation and this is the execution. Understand? So expectation need to have like this type of key levels on higher time frame. If you are going for low time frames for your entries, what do you need to choose? You need to go for like, here you can see what happened here. We have on this daily level, we have, so this type of the move, which is internal range liquidity to external range liquidity, right? So internal range liquidity has been taken out, the external range liquidity has been target. Okay, so here what I told you, the price always came to take the liquidity. Here you can see we have some imbalance like this level. So if you are seeing any sweep on H4 time frame and it provides you a engulfing type of entry, then you can look for some buys from here to target like this level. Understand? So this is what we are looking on euro AUD, and we must see the euro USD and GBP USD, which we call the major pair. So let's get into the euro USD. So you can see on euro USD what happened here. Let's get into the higher time frame here on weekly. So what happened on weekly? So weekly we don't have anything here. Here we don't have any sweep on here. So we cannot consider any euro USD here because we don't have any sweep. Let's get into the daily. What happened on daily? So on daily, you can see the price gives you a sweep by this area. Okay, then you can see the price gives you a sweep on this level, right? So what happened on euro USD? Euro USD gives you a sweep to these cells. So if you are looking for a cells, you can take your entries on this V-shaped key level like this. Okay, so let's get into the, you can see this level, we have a sweep on this level too. So we have a sweep here, we have a V-shaped key level like this. Let's get into the H4 time frame. So you can see H4 time frame, what happened here. So in H4 time frame, we know that we have a sweep. Here the first sweep was this is the first sweep, this, and it provided V-shaped key level, but we don't have entries on that. Then what the price did, the price broken the structure to this level. So when the price broken the structure to the level, it created a sweep and it created a V-shaped key level like this, right? So after that level, now get into the low time frame on H3. You can see that H3 we have a failed key level. Why we called a failed key level? This is a V-shaped key level that has been disrespected by here. The A-shaped key level has been disrespected. We have liquidity on here, so we can look for some entries this, and you can target to this level. Understand? So this is the thing what I'm looking on Euro USD for some buys. Why I'm choosing the buys? Let's get into the daily, because daily gives you some sweep on this area, like some sweep on buys on the daily. On daily we don't have any sweeps. I always tell you that when you build a storyline, you need to look for higher time frame. For entries, you need to look for low time frames. So for first recent level, the price give you a buys, right? So this is the sell the price gives here. The sell will be entered when you have the sweeps on buys. Okay, so what we need to look for, we will look for a buys on here to target this level. You don't wait to target, don't need to take a sells on this level. Why? That sells has been entered by this sweep. This sweep has been entered by this sweep. Understand? So the recent sweep was this, so you can target to this extended range liquidity here. So that is what I have give you an entry on H3 time frame, because H4 time frame it's already give you entries. If you are missed that, why you can see here the H4 gives you an entry here like this. It is the entry has been not taken, but it gives you a breakout structure here, and it start to give you another liquidity here. So the liquidity has been taken out, and H3 you can see on H3 we have an imbalance here. So what I told you, when the price came to this level, I told you the price came to two levels, two things. One, the liquidity, and then imbalance. So after the imbalance, if H2 time frame or H1 time frames provided you engulfing entries. How the engulfing entries has been provided? It provided by a 2 candle. The first candle low has been swept by the second candle low. So what I told you, you have a sweep on this imbalance level, which is give you a confirmation the price going to go long, right? So here you can look for some entries on this V-shaped key level, then you can target into the external range liquidity. So understand that how you need to look for entries. Entries you need to look for a sweep. So whenever you have a higher time frame key level, that may be a sweep, that may be a key level. On lower time frame, if you are looking for entries, go for this engulfing entries which have a sweep, and the candle low has not to be taken by the second candle. Understand? So that is the thing. So anyone? So this is the outlook. So you have any doubts, trader Desmond can carry on. If anyone have a doubts, we can clear that. So the session is about almost 1 hour. Yeah.
All right, please, if anyone is having any question, there are some questions some persons already asked in the chat. Please, Fazi, if you can check the chat. I made a post and I said, if you can check the chat.
So if you have any questions,
Abdulaziz, I will give you mic to speak right now. Just exercise little patience. Okay, Abdulaziz, you can kindly ask your question. Jonathan, I will give you mic. Hold on. All right, Jonathan, you can speak. Okay, Abdulaziz, just go on. Just hold on, Abdulaziz, go on.
Good evening, my boss.
You're welcome.
Yeah, good evening. Thank you very much for the what you have seen so far and everything. I really appreciate, and God keep blessing you and more knowledge be in life. My question is that in a scenario whereby we have weekly rejecting weekly, then we move to daily for breakout. So we didn't see our breakout. Then we have what we call the previous daily what has been taken out. Then we go to 4 hours time frame to check for maybe breakout again. Then when we got to 4 hours, then we have what we call a sweep of liquidity, but we price have not created a breakout yet. And what we move to lower time frame. We do not have breakout on 4 hours. We do not have daily too, but we have what we call the previous daily what have been swept out. Then we move to 4 hours to check for a breakout. But price didn't give us a breakout. But price have what created a V-shaped key level, the sweep and that kind of information. But when I move to 1 hour time frame to look for my inducement liquidity for entry, can I use that kind of information to take trade in a scenario whereby 4 hours did not give us break?
All right. Fazi is currently not active, but I will throw in little stuff you need to understand. I think he's not currently active right now. Now you are asking a question concerning if you're having you're building your bias from a weekly time frame, and after a weekly rejection, you go to your daily and got your daily rejection, but you didn't have the breakout. Now this is something you need to really understand,
Now,
and these are the mistakes a lot of persons are making. You get one thing you really need to understand here is time frame alignment. When you understand time frame alignment, you'll be able to understand how to apply all this together to come up with a proper analysis. You get so now if you are building your bias from a weekly time frame, if you're building your bias from a weekly time frame, after you marked your level you're expecting a rejection on a weekly, after that rejection you go to your daily, look for a daily rejection again and a breakout, then your entry should be on the 4 hours. But me personally, I don't use such method because most time you may end up having a bigger SL on the 4 hours for your entry. So during, like me personally, the method I normally use, or what I've done in the market that is working for me currently, is the points, in the sense that if I want to do my weekly outlook, I will mark my weekly level, my weekly key levels I'm expecting a reaction from. Once I get that reaction, I want to move on to once I get a rejection from that weekly level, I want to move to my daily time frame. On my daily time frame, I want to see what a rejection, that is daily rejecting daily. Then on 4 hours, I would really love to see my breakout. You get. But there's another way I normally do. If I didn't see my breakout on the 4 hours, I use my 2 hours. So I'm planning to create a YouTube video on that, which I will share. I wish Fazi is still online, would have shared his screen to show you a chart example. But for the fact that he's not online right now, I guess I will have to add this to the YouTube video I'm trying to make, because
okay, so
right now, yeah.
Okay, you are saying that in a scenario where we now have 4 hours breakout, we can move to 2 hours to check for our breakout 1 hour. So if we see it, we can ride on.
Yeah. And again, another thing to understand here again, if you are building your bias from a daily time frame, you just need to wait for daily reject daily, 4 hours to get 4 hours and the breakouts. Then you can do your entry on the 1 hour or 30
minutes.
Yeah. So now you asked the question concerning if you didn't see a breakout on the daily. For me personally, I don't look for my breakout on the daily. I don't really know why some persons are saying they want to see breakout on the daily. Like, God, I've not. In fact, I will not advise anybody to look for your breakout on the daily. Look for your breakout on the 4 hours time frame, possibly 2 hours time frame. 2 hours time frame is very, very strong for me personally, because I've tested on it, I've tested on it. And in fact, if I didn't see my breakout on the 4 hours, I normally use 2 hours, so it really worked. Well, like I said earlier, I will make a YouTube video on it and I will share with you guys so that you guys will get a better understanding of it.
Okay, now, thank you very much, bros. I really appreciate that.
You're welcome. Now, there's something I really advise you to do. Try to understand time frame alignment, because these are where a whole lot of traders are making a whole lot of mistakes. If you don't understand time frame alignment, you end up in fact stressing yourself and stressing your brain. You know, one thing about trading is that I'll just do simple stuff. You don't need to complicate things. You get okay. Fuzzy is back. I believe he has checked the question on the chat. So just try to understand time frame alignment, then apply everything together. So I'll be giving Jonathan the mic to speak right now. Then since Fuzzy is back, if he were under, he will share his screen. Fine. Jonathan, you were raising up your hand. Please, can you ask your question?
Yeah, greetings, my boss. Yeah, I want to get clarification on something Faz said. He said something about after that sweep that the candle doesn't need to close below the previous candle. So I want to know, is it just like something we just have to look out for before we decide to go down, or maybe on a lower time frame?
Okay. Now, concerning that, Fuzzy is here, but I think I will just answer that. I'll answer that very, very fast. Now, when he said you don't, okay, I think he wants to speak. Fuzzy, do you want to answer the question? Okay.
Answer. Okay, I'm back.
All right.
So let's get into the questions. You know what he's asking. When you get into the entries, how you need to know that the price in the candle not to close above or the below before choosing your entries, right? So for the thing here, you can see that what happened here. The price provided you a sweep. So you can see my screen and you can hear me, right? So let's get into the faster for the solution. So we have a sweep here, and what I tell you, we have a V-shaped key level here, right? So what I tell you, the first candle high not to be taken by the second candle. It means you can see here, this is the first candle high, right? So when it provided a V-shaped key level, this candle highs, this second candle high not to be taken, right? So here you can see the second candle high not taken by that level. So in this type of level, it provided a V-shaped key level, you can look for entries. So here you can see after taking the entries, you start to take this candle high with the body. So this is how it need to be look out. Understand how it is need to look out? Always the first candle high not to be taken by second candle body. So if it is close to below here, it provided a V-shaped key level, then you can look for entries like this. So this is the example for that your questions. So the next one, can you understand?
All right. Jonathan, I hope that is clear.
Yes, it's clear.